Okay, hi everyone, Daryl here. This is lesson 30 in my Investing 101 YouTube playlist. Today we're going to talk about rallies or what is a rally. Okay, so a rally is a period of sustained increase in prices, and it's important for us to identify what is a bull market rally versus a bear market rally. So a bull market rally is when uh, everything or the overall investment climate is very positive and prices are generally moving up uh, during this period. So the difference between a bull market rally and a bear market rally is that a bear market rally is when prices are generally falling over this period, but there are instances or short periods of time within this bear market whereby prices tend to stage a small recovery. So this is a bear market rally versus a bull market rally. Okay, so what causes rallies? They are usually caused by a large increase in demand. So, for example, uh, because of the low interest rates that were implemented after the global financial crisis in 2008, property prices have rallied substantially, um, generally across the world. The main reason is because interest rates are at an all-time low for a very long sustained period of time, and this caused the large increase in demand. Okay, so it's important to identify the time period of the rally. So like day traders, they may determine a rally differently from a long-term investor. So a long-term investor may take a time frame of maybe 10 years. Then they look at the prices for these 10 years and they say, these were periods of whereby prices increase. So like maybe a rally maybe 3 or 4 years out of these 10 years. But a day trader, right, they may determine a rally very differently and they may say that uh, today the market rallied. Okay, so when you look at CNBC or you look at Bloomberg and then you read the reports there or you read the articles, they may say that prices rallied today. That's in relation to day traders. So day traders may think that, oh, I determine a time period as maybe just one trading day. Then during this period, right, the market rallied from 1 p.m. to 3 p.m. That is significantly different from a long-term investor looking at a rally over 10 years. Okay, so a rally is usually identified using various technical indicators, and some traders or some investors, they will actually understand technical analysis before they purchase certain counters on the stock market. And myself included, right, I tend to look at trends. Therefore, I use technical analysis to see whether I can enter into a particular stock. Okay, so there are people who live off this and they trade on trends and they are called trend traders. So they actually see which counter on the stock market is rallying and has certain characteristics in terms of looking at the technical indicators on the charts. So these people are called trend traders. Okay, so there's actually a difference between short-term and long-term rallies. So a short-term rally, I will give you an example, is for example last year in July 2018, the Singapore government actually came out with some property cooling measures, and it these property cooling measures actually increased the buyer stamp duty by quite a significant amount, and also decrease the loan to value that buyers can actually take from the bank. So what happens is that these people uh, they wanted to avoid paying more stamp duty and also take more loan. So what they did was that they entered the property market on the night that the government made the cooling measure announcement. So for that particular quarter, the figures were extremely high. That means the number of people who bought properties was extremely high in relation to maybe a couple of months before, or maybe it matched what happened before the cooling measure. So it's important to note that when people show you this figure, you say, hey, you see, after the cooling measures, right, the property buying trend is still up. That's not true because this is a short-term rally. When the cooling measures come in, we expect prices to fall and we also expect demand to fall. And then when people show you this, it's because just nice for that particular quarter, the government came out the cooling measures. Then for that one night, so many people crammed into the show flat, and then they bought a lot of properties. So of course, all those properties will report very, very strong sales. So this is a short-term rally. But what is a long-term rally? In fact, we are in the midst of one of the longest term rallies in recent times. So since the 2008 financial crisis, uh, property prices and the stock market has been on a very, very long-term rally. In fact, uh, the last time we actually had a recession, right, was about 11 years ago. So this is one of the longest sustained periods of rallies that I know since I've come out to work. Okay, I'm not very young, but I'm not very old also. Okay, uh, so we must identify what are the factors that will cause these rallies, and we must understand whether these rallies actually uh, tell us and help us in making our investment decision. So if you see that the property price rally is caused due to short-term reasons, right? Then maybe you may want to analyze and see whether your purchase uh, is justified or not. So and then if you see that there's a cause for longer term rally, like for example, I've been perhaps a little bit more bullish on maybe Bangkok property. The main reason is because the Chinese have this One Belt One Road or the Trans-Pacific Rail network that they are planning and they are building, and Bangkok is going to be the transportation hub, which will actually link Bangkok to Kunming in China. So there's going to be a high-speed rail that will lead all the way there, and also from Bangkok it will lead down to KL, and from KL then to Singapore. So these are things that I think will cause long-term rallies because infrastructure is improved, and then you can't just take away infrastructure overnight because infrastructure has already been built. So I think these factors cause myself to take a longer term view of maybe the Bangkok property market because I think it will rally. Okay, and then when I look at perhaps the Singapore property market, I'm not asking you all not to buy Singapore properties and buy Bangkok properties. I'm just saying in relation. And when I look at certain numbers, right, especially last year, the third quarter 2018, then I see a number of properties that were sold in Singapore is actually quite constant. But when I delve deeper in it, then I realized that oh, actually this is just a short-term rally because the government came out with cooling measures, right? Prices and demand for properties will definitely drop. Okay, so there's no qualms about it because no one wants to pay the cooling measure. So this is a short-term rally that happened last year in third quarter. Okay, so it's important to note that rallies usually come before a long period of flat or declining asset prices. So you must understand that prices will rally and move up for a sustained period of time. If let's say it's a long-term rally, then there will come a point in time whereby the rally will actually plateau because property prices based on human behavior tend to accelerate and cross what is fundamentally sustainable because it's human nature that we overdo things. So when we buy, we tend to overbuy, okay, because fear of missing out. Then after that, when we sell, we also tend to oversell. So it's important to note that because of human behavior and human psychology, right, rallies usually come with a long period of flat or declining asset prices because people realize that it's too high already. Maybe it's time to hold off some purchases. Then prices will plateau, and if fundamentals are good, it will plateau for some time before it will take off again. So that's why some people tend to say that when you buy properties, you take a longer term view of everything, which I myself tend to agree to a very large extent. Okay, so that's all from me now, and yeah, I'll see you at the next video.